called the backside and front side of legs. So just like we had talked about previously, we kind of defined these areas here, and we talked about hold levels, right? We talked about these strong and greedy hold levels. Okay, so we have something like this down and saw this, and then so you have these other regions down here. So we're just actually going to go to a larger time frame and kind of find what we talked about before, which is like the backside of a move, like the strong and greedy hold levels, right? Like if this is a strong hold level, this would be a greedy hold level, as to where a strong hold level has a big reaction and a greedy hold level tries to hold through trend, right? Like this was the beginning of us starting to talk about how we can identify some of these different types of hold levels. So you kind of have to build to this because there's just so much information. So many people saw this level here, the 76.90 level, and it was a great trade because we knew that 76.90 or whatever, it's going to have a big bounce, and so it did in that moment. And people are making hundreds of percentages, 600% here on leverage and so forth and so forth. And then it goes after another backside level, which was right here, which was that, or was it here? Actually, I think it was here. This is that level that people had found. It's that backside level. So you can even go into this replayer here in the moment, and you can see where these things are bouncing, pretty ferocious.
So I think there's something pretty interesting to talk about here. This video is all about ranges. Ranges control everything in the market. So just to preset the tone of ranges here, let's do this. Let's take this. Let's put all of this into a new folder. That's fine. We just call it group one. So just a quick little trick for everybody. If you ever need to get everything in real quick, you highlight it all, put it into a new folder, leave this, copies it, clones it. Yeah, and you could just take that and hide it. So that's fine. That's fine for now. So let's officially discuss ranges and what a range is. This might be a bit rudimentary for some, but that's okay. We can officially discuss, okay, what is a range? A range is the piece of the chart that holds everything up or down. It's where prices exist. So if I was to, yeah, I think the daily is good enough here. That looks fine for me. If I was to break this into ranges, I would do like this. I would say, okay, you've got a range from here, right? So you've got this hold level here, which was pretty easy to see, right? Like that was a pretty easy, pretty nice little test. And this range actually doesn't exist from where the move gets held. It exists from here, right? It exists from here to here. The range above that. So this is how we're going to do this, like this, and we're gonna put these pretty opaque. That way, as we overlap them, you guys are going to see it's getting larger. The previous range exists from here to here. As to where the test was testing, I believe it was the weekly, which I think was this. I think it was this candle here. It was, anyways, it was the weekly, right? Like it was the weekly. That's what it was testing, but the range exists all the way up here, okay? Inside of that, you would have had a smaller range. In that moment prior to that happening, like this to this, weekly was hit, that's fine. And now you have a range like this. Oh, I did that the wrong way. That's okay. We can just expand it out on this side, this to this. So you can see that ranges live inside of ranges inside of other ranges. So when you lose one range, you gap to the next. When you lose another range, you gap to the next, and so forth and so forth and so forth. This is dictated by levels, and levels live inside of ranges. So just very important to realize the very, very basic range stuff, but realize that every range has a higher range, which has a higher range, which even has a higher range. So then you would have like this to here, which creates a higher range. And you can see how much more dense the color of the boxes are getting inside of this, which would have a higher range, which would be here. Well, there would be one here as well. Here and so forth and so forth. So ranges live inside of ranges, live inside of ranges, live inside of other ranges. So this is just really important to realize at first when we start talking about ranges and discussing ranges. You have no access. I'll take a look when I take a break. One can relay that message to Pat that I'll take a look when I take a break. You have ranges inside of ranges inside of ranges. Like this is important to know. And this is where the gaps in the market exist. So when you lose this range, you're going down to this range here, right? Let's do that again. You lose this range, you're going down to this range here. When you lose this range, you're going down to this range here, and so forth and so forth. So this is extremely important to realize and understand that ranges exist inside of other ranges, and they are dictated by levels. So that's super important. I'm gonna hide these.
Bounces, right? Like hits this level, bounces straight up within an hour for 4%, hits this level, bounces straight up in an hour for another, whatever this is here, 4%. And then it kind of keeps going. And then, you know, it gives another entry a little lower here. And so we already know how to find these. Like we've already done this. Okay. So we can actually get out of here and go back to our larger scope here. Let this play through. You see trend is hit and all that. You even have the same information back here, right? You would have had like a weekly level back here, and you would have said, okay, you have a weekly level here. That's kind of starting valley. And then, you know, if you actually go and find kind of where this is here in this range, daily here, and you're going to see the daily level that gets attacked right there, right? So you're going to see the daily start to this kind of valley break here. So you know, when you're looking at this, you can see what starts the move, which is this right here. This starts the move, and then you're just simply finding your valley down, right? So this is the same thing we looked at, right? Like, you know, you can inverse a chart and you say, oh, this is a backside hold level. It's a knife catch, and you know, actually it is. It's exactly that. You know, there's 20% to be made here. You know, really crazy trade. We simply go back here and we see that's the backside of the move. So, you know, we always talk about this the greedy hold level versus, or sorry, the strong hold level versus the greediest, you know, and the greediest would be, you know, somewhere down in this region, maybe even right here. I'm not too sure. Maybe even around right here. So now what we're going to talk.
Okay, another important thing to note here. When we say that ranges, hold on, this is going to be kind of a key piece of information. Oh, not that one, sorry. Let's take that off. This is going to be kind of a key piece of information. Ranges are created at levels, or I should say dictated by levels. That would be the correct way to put it. Ranges are dictated by levels and created as wicks. So what that means is that a level, let's get our level tool, a level, whether it's the top of the part of the candle, the base of the candle, these will create ranges, but the range is dictated by the wicks. So whenever you're looking for a range in a move, you dictate it by the wick. And the reason you do that is because that's what could ladder the move, therefore staying in the range. Levels can get hit and a level will create a range, right? So like this creates, this is a range, right? So this range is created once this level is tested, it's held. Now you've got the wick of the move is the range. So it's very important to know. Levels may create ranges, but wicks are what dictate them. So when you're talking about where's the range, how to properly mark out a range to see what could possibly get attacked in a move, you would go from wick to wick, right? And that's dictated by levels. Like this had hit the weekly, this had hit the daily, and that's fine. The range of this prior piece is up here, and that's fine that it hits the wick of the move on the weekly, and it's fine that it hits the wick of the move on the daily, but it's the wick below, right? Hitting the level is creating the range. The actual wick of the move is the dictation of that range. So that's important to realize. So when you guys look for ranges, which you have to, because then you're going to say something like this. Okay, here's the top of the range that gaps the move. Here's one of potential greediest points on that move. This can't exist until you understand where the range is. So it's super important to know that when you create ranges, you create them on wicks where the levels were tested. So this tests the weekly level. That's the wick you use. This tests the daily level, right? This can create its own micro range from here because that's the test of the previous level, creating the new interior range. See how, come on, one more. This backside here on the smaller time frame creates that. That's where your range is, right? So that now you have a proper identification of ranges. Wicks that test levels create ranges. Yeah, that's a good way to put it, Orca. Levels create ranges. Wicks dictate the boundaries. Exactly. I don't know if I like that word, the boundaries, because it's the actual word. I guess it's the same thing. I guess it's the same thing. Okay, continue on.
About is evolving that to what's called the front side and back side of leg. So we have,
and just so we're aware, doing range work is something we are going to do for a long time. Range work goes very deep, and there's a ton of stuff to talk about with ranges.
this we are going to call BS, right? This we are going to call FS for front side and back side, because this is basically what we did. We defined front side and back side legs, right? So this is exactly what we did. So whenever you're looking at these moves, there is something we do called range finding. Okay, so range finding looks like this, and it's all about finding the correct level. So range finding looks like this. You identify where moves start and end, right? So we can, delete that, and we can identify where these moves start and end, right? So we know that this move starts right here, right? Like you can see where the wick is that starts the move, right? Like you can see. So we know this is called range finding. We define a range, right? We're trying to find what range it falls under. So this is the range that it falls under. This starts that move right there. And this is.
So just to clarify, this would be the range of the test, whether it becomes the backside, a combination level of some other type in the future. This is just dictating what could possibly create the range below.
Kind of the bottom of the move, right? Or you could even say that this is the next hold level inside of it, or I guess you would actually say this one here. I missed that one here. So this is the range, the bottom of the move, kind of to the backside of the hold. Technically, if we were looking at this and we deleted this, right, and you flip this chart, you would be here, and this would be like your greedy level, knife catch, blah blah blah, all that stuff we talked about strength, because then your greedy level would be right here, right? So then now you have your greedy level. But actually, we're going to start calling this backside, not greedy versus strong, because that was just terminology we used to start teaching and understanding what these things do, right? So we're going to flip this back over. I always flip my charts to just kind of get a little bit of clarity, because it makes it very easy to see where these moves are going to bounce, right? So we're just going to simply flip the chart once again back here, and we're going to go back to finding the range, right? We know the move starts here, and then the actual bounce level is there. So now we can go and start finding what's called its range, right? So we can start finding where these levels actually are. So we do have our first level right here. We have our first daily level right here, right? So you actually do have kind of this range that you've defined. So this is, and this one is BS, right? One is BS and one is FS, backside and front side. So this is the backside of the leg versus the front side of the leg. And you could have drilled down here and found the 12-hour right here. And you can see where you're redefining your range, right? Or the 4 hours, sorry, not the 12-hour. You're redefining your range. You're finding the actual part of the move that's going to bounce the move, right? Because what the point of this is called finding the backside of a leg and finding the front side. And we can.
So right here, instantly, I would take a look at this, and I would, outside of ranges a little bit and just more inside of general technical analysis, I would look at this in two phases. I would look at this as, let me make sure you guys can see my mouse. You guys can't. Okay, let me click on the screen here. Okay, there we go. I would look at this front side right here of the move as the actual valley that starts it, right? So this valley here would be its own kind of little micro range inside of all of it. So prior to this being hit, I wouldn't be looking at higher timeframes. I would be actually looking at whatever backsides could hold it back here that prevent this range from being attacked. So now you can kind of get into this idea that there's a range inside of a range. So instead of you just having a backside, front side, that's the normal way we mark them. We mark screen freeze. Why don't you pick downwick left of this? I'll take a look at that after. In this move right here, you can look at this as the break levels on one time frame. They're going to have kind of an interaction between this. So this is kind of its own separate piece. So imagine this is backside. Imagine this is front side. And then if you were to draw a tool like this, I actually don't know if you can do this or not. Rotated rectangle. There we go. That's what you would do. Let me find a spot on the chart where this exists. Actually, we could probably go to the same timestamp. February 17th. This is kind of important to know here. I'm using BXBT on here. Let's go BXBT so we get the same thing. This is BitMEX's Bitcoin chart. Oh, old chart. Wowzers. So it looks like it's around here, right? Down here we have the bottom of the move goes to March. Okay. So the bottom of the move goes down to March right here. Oh, this is perfect. So what I would do here is if you see this as the break of the move, right? This as the backside of the move, there's an independent range like this. So this is kind of something I haven't really taught before, but there's a connected range between these two where typically somebody would do this. That's fine. We can go here. Typically somebody would do this. They would go to a higher time frame and they would mark out, okay, here's you know, the break level on a smaller time frame, which leaves this right here, which leaves this stuff up here, and so forth and so forth. And you would trail back all of your information. You could even just go like this to the weekly. You could even just use backside weekly here in this case. Delete this. It's fine. Turn this purple so we understand this the weekly. And typically people would create a range relationship like this. Break weekly, break, hold, right? There's a relationship that happens between ranges as you go through break levels, right? So if this is the 4-hour break level here, there's a range relationship where backside, frontside happens like this. And that's the range that gaps the move. So we'll talk about more of this in the future. But what I want you guys to start thinking about is a relationship that can exist beyond just frontside, backside. A relationship across our chart where you can have smaller time frames dictated as backsides, because too often I see people doing this. I see them just marking, oh, here's the daily break level, which means the only possibility is right here. And this leads to seeing early breaking in a move and things like that. And they will have a kind of this confusion as there's tons of valleys back here. Like if you were to go and mark these all, you would go and you would mark, well, let's do it. You would go like this. This is a 4-hour, that's great. It's a daily. We can keep this as a daily. That's fine. Keep this daily like this. They would then go and mark. This is a 4-hour, which can't really be there because it's protected. And this one was never tested, so they're not sure if this should be used. So we can keep that one on the chart. And a weekly. Now let's go to a 4-hour here. And then they would get into this kind of scenario where it's like, okay, now what? Okay, well, there's a 4-hour backside here. So can this be tested, right? And then we can, next one, which would be here. And then the next one, which would be here. And you could just like continuously do this forever, right? Well, there's a way to see when these things gap. Here. So like you could do like and then your chart looks like this and you're like, okay, well, what the hell are we doing here? Like this is too much. And then if you let this move play out, you'll see some of them gets respected, some of them don't, right? Like this is that. We can just go to the daily here and press play. Maybe it might be a little quicker here. That one gets tested. That one gets tested. That one gets tested. And then all of a sudden you move up and through all of them. It's like, whoa, here's the weekly right here. How come you back tested all of these guys, right? How come you back tested all of these little micro timeframes here? But then all of a sudden you have, well, okay, fine. Maybe this one is tested there. So that one is justifiable. But then this one is justifiable to take off. Then what about this one? Couldn't it just ladder this? How come it moves straight over top of that? And then also straight over top of the daily and the weekly straight to the next weekly, right? Like, how does that happen? Well, because there's a relationship that can exist on a plane that we haven't discussed, which is horizontal and vertical working together, kind of this diagonal plane where a relationship is built between front side and back sides at different time frames as to where this is the range. And we're used to seeing ranges like this. We're used to seeing, it's in my quick tools. We're used to seeing ranges this way, while ranges can actually exist diagonally too, across the horizontal and the vertical axes. And when you're working with two axes, they tend to lead to bigger moves, as you're seeing here. So it's not something I'm going to teach today. Indeed, it's actually butterfly effect too, but it's good to realize that when you guys are doing your ranges going forth in the future, there's actually a lot of different relationships that exist across the ranges and how they're represented and connected to each other. So sometimes when you guys see moves like this, and you would go to a weekly and you would say, well, what happened here and here? How come this didn't bounce the move? How come this was target? What about this? Well, that was a great target for sure. There are times where you won't be able to answer with a range. There are times where you'll see this and you'll be like, oh, what happened? And you won't understand the relationship of why something can gap so hard. But when you have ranges, ranges can lead to gapping moves. The problem is that you guys are only seeing ranges linearly. There's more than just linear ranges that exist. Again, more on this in the future. I just want you guys to be aware that the amount of interplay in ranges is huge. There's so much information to be gleaned off of ranges and where things gap and base. Sorry, I shouldn't say gap because I use that terminology different. Typically people are talking about gaps in the market where price gaps, which was used to be called a window in the markets. When things pump and dump big, let's put it that way. When things have these big movements and they push through levels because the bases of ranges were broken, there's a very deep relationship there. Let's go back to here.
Find the move just like we did here by finding where the hold level actually is, right? Like the greediest part of the move. We're always looking for the greediest parts of moves for rejection because that's where big injection comes in. So we start by range defining it here. We go to the daily and we say, oh, okay, well, this is a pretty huge bounce. What's kind of the greediest levels in there, right? And you can go through time frames here and you're on the 12 hours, so nothing has changed. And you can go to the 4 hour and then you can start to look in the 4 hour and say, oh, there's actually the start of the valley is here. So if you were going to bounce off the backside of the leg, you would have to define the range prior to finding the level. Okay. So then if you go into this moment here and, we can just kind of rewind this to maybe here, we can just go to here. That's fine. And we can see how this becomes a one and done, like your standard knife catch and it's gone. Right. So like this is exactly where the level is because what we're doing is called defining the range. Right. So we're doing this on a large time frame. So we're going to do this on small time frames too in this lesson, but we have what's called the backside of the leg, which means that this would be the front side of the leg. So this is the back and this is the front. So this is the greediest level up here and this is the greediest level down here, right? So you've got the back and the front side of the leg, just like we have marked over here, BS and FS. One is BS, right? So we have the backside and the front side. So now we're defining the range of the entire move. So at first, we need to define the entire range like this. Like this is the entire range of the move. So this is where we're saying, okay, this is the start of the valley right here, right? Like this is what starts that run up, and this is what ends that run up here. So this is the range that we first define. So when we range find, this is the first range that we have to identify. Okay. The second range is saying, okay, we need to find the backside of the leg. So that's why this is marked in BS. So this is the backside of the leg is trying to range find inside of here and how we found that level when and said like, okay, we've range found that level in here as the backside of the leg. And then we have another area, which would be from here to here, which would be the front side of the leg. So now we could go on the front side of the leg and do the same thing and find the greediest levels, right? Once this actually, so what we're going to do is we've now understood how to find the ranges on the move, right? Like the top of this candle to the hold level here, the top of this to its bottom of this, right? Like the top and bottom here. So even this would be like, this would be the range, right? Right in here. So this would be the front side range. This is the backside range. And then we do the same thing with this. So actually we can go do that right now. We can go to the daily and see that, okay, there's a bit of a better range in here. This is the hold level right here. It's untested as to where this is closer to tested. This is untested. So this is your untested daily, right? this would have its own backside frontside combination. So even in this moment, you would have like this would turn actually into the backside. So we're going to actually turn this into the backside because this is the backside to this front side here. You see how we took that top and we dragged it over to define this range. So this would actually be the backside strong bounce level. And then we need to go in here.
So what you are doing here is much of what we've been talking about finding the greedy entries in a chart. So when you're thinking about, okay, backside, frontside combination levels, this makes up of where the range will get created. So this larger bounding black box up here, the smaller black box inside the large bounding box. So the one that's got more built-in color on it, this is trying to decide whether it's creating a test on the front side, back side, and the whole part of this wick top from here to the bottom of the box here as the backside, any one of these levels inside of here can create the range. And just remember what I always say, if it can go there, it will. It will always try to go to those greedier points. So when you are looking at creating a test on a move, oops, I didn't mean to full screen there. When you are creating a test on the move, realize that it can be the backside, front side, wherever it ends up going, that's where your range is created. So that's what we're highlighting here, is the potential different possibilities of levels to be tested that can create the range. So it's like what this black box here is the range of what can be tested that will create the bigger range of the move.
Inside here and continue finding these levels. So this is the backside and this is looking like the front side from what we know now. So now you have a backside front side combination inside of here, right? So then we can go in here and take a look and see what's actually untested at a time frame that makes sense, right? So you actually have an untested 12-hour level right here. So now you kind of have, again, going back to what we had talked about in the past, the greedy level versus the strong level, right? So now you have something where you're actually
I would actually say this is more likely to get hit, this stuff up here, depending on where trend is.
To understand where your two different levels are defining, right? And even here, you would possibly have another combination right here, where this is the front side, and now this is like a combination level, backside, front side combination level. Because in one scenario, if this is going to get attacked and it moves through like this instantly, it might go after what this would be considered the front side. But if this gets tested and rejects, this now turns into the backside of this because this is the front side of the leg. So this is all about understanding where there's multiple spots where these decisions and points happen, where you have backside, front side. Once this is hit, you have backside, front side. Once this is hit, this would be turned into the backside, and you'd have a front side inside of its more minute range. So you know, in the moment that this is hit, then you would even, let's copy and paste this one here. Let's grab this level right there, copy, paste it. Then you'd have a range between here, where this now would turn into a backside, and this would be its front side. So even here, we can go into the hourly and see where the valley is, because that technically now, if we actually look at this thing, it's actually the backside of the valley, is it not? So all we've done is define the range, and we have an untested hourly front side, greediest point inside this move, most likely a level that's
technically a backside, but that's fine
because you're now getting
explain
into the
it for these lessons. It had to be done like that.
Of the move, right? Now you're starting to define the ranges within inside the move. You know, what's the greediest part of the move? You have your backside leg, which causes a big bounce because it's testing the first part of its range. And as you go through the trade, you have these different kind of levels. You know, it kind of becomes your decision. Where am I taking these trades, right? Like which level am I taking these trades? And that part of range finding and understanding the data points, right? So you can see this was actually already tested here. This one is not. You can see that this held this move down, right? And this possibly had its own range like this to this right here, which would have started the entire range of this. So this right here would have been another backside, front side combination. You'd have to go in and do your time frame and work, because this stuff takes sometimes quite a bit of a time investment to find these things, but then you find perfect points, right? Like you can see it right here. You have the perfect bounce here. Like this, you have this here, which is a data point in the future right here. And then alternatively, this one here afterwards. So you test, right? Come back, test this range, have not tested this because this backside range to this front side held, which causes you to dump down, retest this range again.
So without going too deep into this lesson at the time, This was clearly, and I'm pretty sure people can see it now. You just snap this level to this right here, which was the actual test of the greediest point. This backside level, this gets hit. This backside level is next. That backside level right there gets hit. So without getting too advanced in these lessons, just don't mind when I'm saying, oh, you're testing this level and that level, because then you guys can just do the visual work yourself, and you can clearly see that here's the greediest level inside of that range, which had laddered this to that greediest point, which then becomes a ladder off of this to here, right there to there. Let me make sure my mouse is showing here. It's not. Sorry, let me do that again. This backside point right here, you can see it's the test is on the backside of the level. This one right here is the front side of the level right here. This is the backside that it tests right here. This holds this up because it's a ladder point. This can then hold this up because it's a ladder point off this. And this is the test of that backside. Once again, continuing to hold that move through that backside. So despite what I'm saying as keeping the levels kind of clear here, just realize we were only on lesson 10 of butterfly effect at this point. And before making it too complex for people by adjusting both hemispheres of this chart, what happens on this side of it moving down and attacking this level right here, versus it being on this hemisphere attacking the backside of this. Just easier to explain at that time like that, just to clarify.
Right. So you can see where the range finding is a very tactile tool, and you can have a very accurate response in your decision making, just like when we look at.
So we need to rewind there for a second and talk about something. I had moved down through this range. Okay. I had moved down through the entirety of this range through time frames. So when we are working with ranges, it's important to realize that you have to move down in time frames to find the points that represent the range. Like right now, we're on a weekly. There's not much hope here in marking anything other than maybe this as what could hold it up in the future. Weekly level, sure. Work down in time frame, right? So now you have dailies. You have your daily level here. You have your daily move here. So you could go now mark this guy here, right? Let's turn this red. We work down in time frames to find the other parts of the ranges. You can go to a 4 hour, right? Now you can see that you would have 4 hour backside here, and it actually looks like the level is right here on an even smaller time frame. Experience tells me that this is something smaller. Just the way the candles are. Yeah, it's right here. You can see where that backside exists on a lower time frame, and you can tell that because you see how this kind of creates its own range here. Like you'd had like a 15-minute here that held the move up, and then this creates kind of the hold level that would have represented whatever this range ends up being. Like if you were to take this replayer tool, go back in time to this would have been like this, right? This would have been just your kind of bonehead trend in the moment. And then you would have had no real testable candle here, but then you have a range created here off the hourly. So this would have been what dictates this move being able to hold up. So that's why when we're on this 4 hour, and you can kind of see it happens right here a little bit. This is just an experience thing. You can see that there's another range created inside of here because of the bottom of this candle and how high it goes and how low this goes. You can see that there's ladder points being created in there. So there's no, like, that's what I mean by experience. And then when you break it down, you can see that there's actually the hold level right there. So then you move forward in time here. Let's go to a bigger time frame. That's going to take way too long. Great. Oh, stop. Dude, stop. So when you go to this and you're trying to find the relationship here that exists inside of the range, now we can delete this and we can say, okay, well, where does this range exist in this moment? Well, in this moment, it would be somewhere between losing this trend and what would be the backside of that range. So then you would go and you would say, okay, well, at first it could be here, right? At first it could be here, which is indeed what holds this part of the move down. And then the next part of the range is here, right? So then you have something between level, trend, and this as the range. So in this moment, it would have been kind of like this, from here to here, right? So that would have been your range. And you work down in time frames to make sure that you can always see where the micro ranges exist. So when you're looking at ranges, you work down in time frames to find the smaller ranges. I can't stress that enough. And if there's one thing I want you guys to take away from this lesson, it's that if this is the larger range here, from the top to the test of the daily, if that's a large range, if you want to find the smaller ranges that control the move, you work down in time frames from that point. Okay. So that, I can't stress that enough, as probably the most important thing we'll talk about this weekend. You see that's tested there. Hits the range, moves right down. What could hold the move up? Same time frame. You see, there's a little trick there for you guys. Time frame to time frame. Hourly backside rejects it. Hourly front side holds it. Pandora's box is created. I cannot stress that enough to find the smaller ranges, which now go like this. Here. We can call it right here, because it could test all the way down to here, which would be this one that just got tested like that. Come on, dude. Cannot stress this enough to find the smaller ranges in a move. To find ranges inside of ranges, you work from the highest time frame down and you compress your time frames to find backsides and front sides. That's a little, again, a little, there's going to be like 99% of people won't quite get that, but that's okay. You'll understand it as we continue to go through ranges in the future. It's way far advanced. It's so irrelevant for what we're talking about on lesson 10. However, it's just things I want people to be aware of early on, so that if they see it, they see it. And if their minds can take it, it can take it, kind of thing. But we're like hop skipping like 50 lessons ahead, but that's okay.
As this backside range to this front side held, which causes you to dump down, retest this range again, right? So you can see where the range finding is
All
a
time
very
frames make
tactile
sense.
tool, and you can have a very accurate
ranges,
response
all time
in
frames.
your decision making. Just like when we look at, you know, range finding, this part of the move here, and we say, oh, there's the daily. Where's the range on the daily? What's the greediest level inside that daily? Where do we find the range? And so you have a moment that happens like this, where you see a one and done. People are waiting here with hundreds of millions of dollars, and it goes down, 18% pretty quickly. You know, you could just play this out and you see how it reacts. And it should have this type of reaction appropriate to the level, right? Like appropriate to the level. When we kind of rewind back and look. So then you can just let this play out here, and you'll see, like, and what does it attack, right? It attacks its own range, right? It attacks its own range right here. So it is attacking its own, combination range that, we won't worry about finding this one, because we'd very much just be doing the same thing over. And maybe that would be a good exercise for you, is to find, where that range exists. So let's talk about how we find that range again. So what we would do is we would start by going to a higher time frame and saying, okay, here's the range right here. You have the bottom of the move here, and you have the top of the move here. So now you have a range that exists somewhere in here, right? Now you have a range that you can start to define. So then you'd have kind of like backside, front side, right? Like backside here, front side here, right? So the front side got tested next, or sorry, the opposite, actually. It would be, I got to turn this around, even I confuse myself. It would be kind of like this. Let's zoom in here. Go to a smaller time frame, because the 1 hour is not enough. There's not enough information here. So you'd have something like backside, front side, right? You'd have something like that, where this is defining the range of those levels, right? Backside, front side combination. Or you just have backside, or relatively even deeper, you would have something like this. We'd have to go to a higher time frame to find this now. Then you'd have something like this, where you have, well, that's backside and front side. So in this case, it would be inside this range somewhere. So here you would define the parameter backside, and then the front side is going to be inside this candle here somewhere. So actually, if we went here like this and we went into smaller time frames, we could see where this guy here was the backside, like the strong level, just like we looked at in the past. That's the level of strength. But now we can actually have real terms. Now that we're getting a little deeper into this thing, we can have real terms, which the front side would now be here. The front side is actually here, and this is a combination backside front side, because once this is broken, it's going to go after this backside, which is going to be the front side of this piece of the move. And I know very confusing, but just hang in there. It'll all make sense, or it already does maybe. So you have kind of a front side to start with. So it would be just like this. It would just be a front side. And then once it's tested, it turns into backside, front side combination level, because it has its own frontal side of the move, right? So it has its own kind of frontal side of the move, like this front side. You have this range of combinations of to where these levels are hit. So that when you look at backside, front side, front side combination after it gets hit, you'll see very much the same ranges all tested, all within here. Like you're going to have the same range defining criterias in here. And every piece of this move, right? Like every piece of this move is going to have this range defining criteria. Oh boy, this might take a while. We're quite a ways back there. So anyways, you can see where this level has its own range that gets hit. This will have its own range that gets hit. So let's go and dissect one that has actually had a range that gets hit. So then you'd have something like this. This is the backside of the move, right? Let's go find the front side of the move. The backside. This would be a combination level right here, because it's not going to be the final one. So this would be backside, front side, right? Like this is going to be, and we'll label these so we can see how it reacts. Backside. This will be a backside, front side combination level. And then maybe we can even go into a smaller time frame here and see what happens on a little time frame. You'd have front side right here. So you have front side. So you can see that the front side was tested perfectly, right? So you can see you'd have front side right here. You can go back to this and you can see where the combination exists, because you've defined the range, right? You've looked at this on the larger chart and you've defined the range, and we're going to use maybe a yellow color for this to define the range. We're going to use yellow like this. So it always starts with defining the range, and we can define the range by this point here to this point here, right? Like the top and bottom of the move, and it has a combination of ranges inside of it. Even in here, if this is the bottom of the move, I would actually go in here and start looking in really small time frames and saying like, okay, here's the bottom of the move. You've got some untested stuff in here, right? Like this would have actually, you can see where the range is defined, right? Like you can see where the range is defined. The range is defined as the bottom of the move, the top of the move. So now you start to have, even again, we did this stuff up here, but let's even take it back a step. So now you can see even here, you would have like this. You would have backside of the range, and we'll leave that one in yellow. Not that it's defining the move, but it's a good criteria. And then you would have like the front side, backside, front side, right? So let's kind of see how this plays out. So there's the backside being tested, right? The backside is trying to be tested to hold. So that backside range is being already tested, right? So if this is gone, then you'd have a combination like this, right? Because that's already done. Then you'd have, two levels here, which would be something like this, backside, front side. You could possibly test this, but I would probably go for the greedier levels. You're on 1 minute candles here. So what I would do here in this case is I would go to like a 3 minute candle, and I would see where the range exists. And you have like a kind of a tiny range in here. So, I would look at this and I would see what happens here. Oh, perfect, right? Range is tested. Backside is tested. You'll go after the front side next, right? So then we can just let this play out. And this would even have its own range. We know this is tested. We can just move. This is, that's where we get this from. Maybe we'll leave that one there and use this one. And then this would be like the backside of this range, front side. So you can see how this is like a combination level as to where this is going to be the backside in the future. This is going to be the front side.
All you're seeing here is a creation of ladder points. Like this is how ladders get created off back and front side levels, and how something is moving through a range and a range is actually developing is through these backside, front side ladder points. So a very, very simple, quick little pause there.
This backside, and then this turns into the backside, front side combination to this front side of the move, right? Like you've got the front side right there. So this is what we call range defining. So this is a very advanced and tactile technique that's used. So you can see even the criteria that's hit, and when these levels are broken, where they're breaking, right? Like you can see now we have decision points. Now you take all this knowledge and you can turn these into decision points where it's like, oh, I should either sell here or I should buy here. I should probably buy this level. And
so I think a key piece of information here is, if I rewind this, I'll let myself finish talking. Hold on.
I should sell this one. or I can sell what's defining the range here. And you have very specific points, because there's only 1% of the charts you should buy in 99% of the action. But those 1% points exist constantly, right?
Okay, something important to note here. Let's rewind it a little bit. Okay, let's maybe get right here. Okay, perfect. So in this chart, when you see ranges like this, and when you see something breaking through a range, so say you have the top of this range, like we defined the bottom of this range. Oh, this thing's about to pump. Like, let's think about for a second, prior to this little micro range being created right here, what happened in the past, like back here, where we can't zoom back to. This was testing a much larger level. So let's call this maybe the 4-hour or the hourly or the weekly, whatever this level was testing here, it's a much larger level that's going to gap the chart. So now when you are talking about, okay, we are about to move through the biggest time frame. So that's what we can first define this range as. Okay, this 59.24 was some larger level. I believe because it's yellow, it was as a 4-hour, but it could also be a 12-hour or a 1-hour in this case. I don't quite remember what I marked, but the point being is this, if this is going to gap the range and it's going to move up and through a much larger move, whatever this is testing, this range down here is defining the test of that level. So let's pretend for a second that we were to mark a trend like this. So we have a trend that goes like this from this bottom to this first distribution candle. So it's a very, very narrow trend. Like it's very, the angle is very small. It's like a 2 or 3 degree angle, right? Like it's just like this, it's very small. Then as this move goes forth, you would have the next trend that's like this, right? You'd kind of have your next trend that's like that. When those trends, let me press play and see how this
backside range.
When these trends, you're going to have kind of a compounding, right? Either a level is going to be hit and it's going to continue the ladder. So that's kind of like the last moment a level gets hit. So we're going to define this hierarchy in terms of a level gets hit. That's the last moment before this range would break and collapse downwards. It would be held up by levels. If a trend is holding it up, you've got levels underneath trends. So that's something important to realize about ranges. If you're still attacking levels, you're still trying to create a ladder. If you are not attacking levels and holding a trend, you are trying to break a move. Trends will try to break moves as to where levels will create ladder points. So let's draw this. Let's go here. Let's take all of these, put them in another group, hide this group. Okay. Let's do that. Right? Rewind this point, and I'm going to explain this. In this moment, we don't have anything established. We have the 1 hour back here, which was hit, right? I believe it's, let's get that test first. We have that's hit. And we have the trend. We need to rewind it 1 candle. Oops, no. And we have the trend that would have been holding this, right? So you have like this trend right here, which would be just a bonehead trend to stuff back here. You'd have, well, we'd have to go to a smaller time frame to find this before. I'm not even going to bother marking the 15-minute here. There to here, which would give you very, very, very like the same kind of thing that we just talked about, like a 2 or 3 degree trend. At that point, you would have this to this, right? So you can see how that trend is holding the move. So when a range gets developed, okay, a range will break once your trend starts to break down. So a trend will go and try to attack this level. When a trend breaks, a level has to be hit for a ladder point to hold the move. So immediately you can see this is holding the move up, or whatever ladder points off of here. Then you can go into the future and create this here. Looks like it's possibly a backside 5. Backside 5 is right there. Front side 5. Okay, so that's fine. Front side. So when this is happening, it froze for you guys? Okay, I'll repeat that. Trends will attack ranges. Okay, so this trend here, let me rewind it even, make it even clearer so we don't see where the trend breaks. Trends will attack ranges. Okay, when a trend can't hold, a level will create a new trend. So kind of the hierarchy of a move looks like this. Try to draw this out as best as I can. In order to break this range, okay, you have trend, which will attempt to break it. Okay, a trend will attempt to break a range. When a trend can't hold, a level, just mark one here, that's fine. We'll just pick the first one we see on our screen. A level will try to create a ladder point, which will try to establish a new trend. So the way we're doing this is the closer you are to the circle, the more likely the range is to break, because the circle here represents the range. When a trend can't hold, it goes down to its next level, which is trying to create a new trend off of a level. So if a trend fails like so, it means the range isn't ready to break. Oops. When a trend breaks, it means a new level will be able to, a new level will create a ladder point, which will try to make a new trend in the move. And once that one breaks, you go down the pipeline all the way down to your further and further and further levels, right? Wasn't it supposed to be this one, I believe? Yeah, I believe it was supposed to be this one. So let's walk through this. Yeah, we'll take a break in a second here. I just want to get through this because this is really important. I'm talking about way more than I should on lesson 10, but that's okay. I have faith in you guys and gals. Okay. The move gets established. This is, oops, come on. This is trying to create, a new trend. Okay. This is trying to create a new trend to attack that range. Once this fails, it will go after its next part of its move, here or here or here, depending on where it fails. So we know this is the hourly, right? Well, where's the hourly level? Well, this one's tested, that one's tested. This is not, so possibly right here. When that breaks, it ladders off that whatever 5 minute that we had before we moved it, right? It hits its hourly level. You can see it tries to hold this hourly level, ultimately goes down to the greediest point on this hourly. So this is where you see ranges being established, ranges failing, moves creating binds. So the different binds of a range. So if this is an hourly level that's hit, you can expect it to go for the greediest hourly point to stabilize the move, which then would say that your range isn't ready to break yet. So trends attack ranges. That's the important thing to notice about this and to realize. Trends attack ranges, and when ranges fail to break, there's a level that gets hit. And when that level gets hit, it means a range attack has failed, which is onset by trend work. Here, let's do this. Even you could have this to this. Whatever range trend you want to find, right? Now, this is what you guys know it from Future of Trading as accumulation and distribution cycles, where you would have level gets hit, creates the 1, the 2, the 3, the 4, the 5, etc. Right? This would be the 1 right here. Level gets hit. It creates the 2, which is the break of the range, which creates the 3, which is here. And then the 3 happens. The 3 breaks. It creates the 4, which would in this case be right there. The 4 breaks. It creates the 5. The move goes down. There you have your classic cycle. A little pulled back in terms of theory. However, it's the way that ranges work. It's the way in which a range gets attacked. Ranges get attacked through holding trends. When trends fail, they go after levels to hold up to create the next part of the move. You could just hit play here and just see that holds through. And it's as simple as that. Trend is still holding from back here, and that's it. Like the move is over. Now you would have been here like this, right? You would have been here, which could be even right here, which is fine. A test on the move, which already went through the move, and then it ladders the retest, right? So very, very straightforward in one way. But the key piece of information here is to realize that when you're looking at these moves like this, for example, and let's move this forward a bit. Come on, let's just go forward to where it breaks up. Oops. Oh no, what did I do? We want to go back full screen. Okay, so this is that same thing, right? Imagine you had like a 2 or 3 degree trend here, right? 2 or 3 degree trend right here. The trend never gets hit because levels are holding it higher than the trend, as opposed to something like this, where the trend is actually being attacked on this move. So you've created a range up top, right? You've created the parameters. You've created the first ladder point, the second ladder point. You're actually not attacking this at all, which would create polarity in the charts. Because if the range has to be held up by the level, which is the trend, if it doesn't hit that, well, you're creating a point of polarity. Again, a little over the top for today, but it's fine. Instead, you ladder the move and you move straight up through it. I believe this should break up at this point. Most likely does. Anyways, not important. Okay, let's take a small break. Didn't adapt this because the trend's not broken. I don't even know if I would use this as relevant in the moment either. I would go and find the actual trend. There's your trend. As always, color code your trends because you can get kind of like trend overload at times. I fully see this trend breaking. Deep dives this trend, respects this one, moves up and throughout in the future. This trend was already created. This 4 hours supersedes this. I shouldn't say supersede because it means it replaces it as well as grandfathers it. This trend exists first. This dictated the move, which is, should just turn this gray in this point. This is never hard closed. So this would be your more accurate trend to use, as to where the 4 hour may represent a bigger strength, but it has to hard close on bigger time frames. So as this move goes on, you can expect it to, even if it stabilizes, comes up to here, bounces off trend. You could see this trend lost, this trend tested, doesn't hard close, continues to hold this, just like it did here. While this happens off a level, it can still happen like that. So this trend kind of controls the move, not the 4 hour. The case where the 4 hour would control the trend is if it goes like this and like this and like this, and then it breaks here. And it just kind of lingers in here for like 6, 7, 8 hours. 4 hour starts to hard close a 4 hour without testing and bouncing this trend back over top of it. And then you get a hard close on the larger trend, which the higher time frame would then supersede this. So it can be a case where go like this, go down here, bounce, regain this like this, and it's like, oh, the 4 hour trend didn't work. Well, that's because it wasn't the right trend. Or it could be a case where you're like this, here, da da da, ba 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 ba, da da da, up here, linger here, and then 4 hour hard closes a 4 hour trend, and then it's like this trend doesn't even exist. It's all in the architecture of how the move is developed. Trend overload, I can relate. Yeah, exactly. And you know that this 15-minute is controlling the move because this is where it was created. It hasn't hard closed anywhere since. It hasn't given you a reason to adjust the trend. So all it's done is create a 4 hour trend, which gives you more data in the future to work with in between these two trends. And the way it acts in between these two trends could be critical information. While testing ranges, levels, is there a way to know when it's going to be a second retest of the same level, or is it random? It's definitely not random. Think of ladder points. This could indeed test this level again. Would it be laddering off of this, which creates a different type of move, or would it be testing the level for a second time? That's a very, very distinct piece of information that you have to dissect, right? Two opposite meanings. We adapt trend to the candle that hard closes it, right? Even if there are multiple distribution candles after, as long as none of these following candles hard close over the new adapted trend. Does this sound right? Yes. Well, I would say it's important to understand the effect of time on the charts mostly here. Where you had this 4-hour created right here, this would still be inside of that 4-hour candle. So hard closing underneath this wouldn't mean much in this moment here, right? So if you were right here in this moment, it wouldn't mean much to hard close underneath this trend because you have the 4-hour created and it's trying to establish the 4-hour. In this moment here, hard closing underneath both, while a 15-minute may hard close, it may linger around there for a long time and not hard close the 4-hour. In here, lingering around in here would mean that you're hard closing the 4-hour, and it could just be something that the 15-minute holds, but less likely, and dumping straight down to, like, for example, here, you could linger around here and hold this 4-hour. If you dump straight down to here and hard close a 15-minute here, well, this may just onset complete failure because the 4-hour was, it doesn't even have a chance. It doesn't need to hard close a 4-hour because it hard closed a 15. So many different ways in which this thing can unfold based on time. It's never one static answer. What exchange would you recommend now after Binance stopped? I've heard good things about Femex and FTX. Bybit has been around for a long time. I think they're all good and bad in their own regard. I think with... So I look at exchanges like this. I use my bank. Okay, my bank handles all my trades. I trust them. If there's anything that ever happens to my money, they guarantee it. Can FTX, Bybit, or Femex do the same? No, they cannot do the same. So be very mindful that these exchanges are businesses that make money, private businesses. Banks are private businesses too. The difference between that and a bank is, there's insurances at banks. They're regulated. They have guarantees in place. They have insurances. These exchanges are like it's just like the wild, wild west with every exchange. So I would just be careful. I'm not saying that they're bad. I'm saying that they have no obligation to, like, if your account was to get hacked, they'd be like, oh, did you have 2FA? No? Ah, damn, that's too bad. I think your money's gone. If that were to happen with a bank, they'd be like, oh, insurance covers it. Here's the $1 million that you lost. So, like, it's just to be aware of it is a bit of the wild, wild west. Again, it doesn't mean that they don't care. They absolutely have no regulation or regulatory board that makes sure that everything is being run perfectly as it should. I guess that's the best way to say it. You must move down in time frame. Do smaller time frames become more important in terms of range defining? The smaller the time frame inside of a range, the stronger it becomes sometimes. That's something we'll touch on in the future. So time frames inside of ranges is for the future for sure. Not that it supersedes the larger time frame, just the actual starter. So the smaller the time frame, the larger the polarity. That's the way I would answer that. So if you have a 1 minute level, it means that could be the final moment, which creates the highest point of polarity. That's how you have to look at that. Just that the actual start of the range might not be the hourly, might have. So, okay, here's how we'll do that. Here's a 15-minute level. Let's hope we don't hard close this one. Okay. There's the 5-minute level down here. Let's just throw it all to the wind and say, here's the 1 minute level. This is the greediest part of the move. Where if you were to go to that 15-minute level right here, you have something underneath here. It could go here while not hard closing this, right? As long as this doesn't hard close, we're good. The move is still there. Well, what does that look like? Hell, that's a ladder point off of here. Damn, we just found a ladder point. So the smallest time frame creates kind of like the final hold in the move, where it can either be the difference between creating a ladder point or hard closing the level above it, which is the 15-minute time frame, which just becomes the moment where impeding failure comes. So yeah, it can be that the smaller the time frame, the more important in the range, but it's not always the case because, well, what's hard closing? What's not hard closing? Time, trends, there's all these other factors that have a play in that, right? Like, what if it happens here versus way out here where something else can hard close, right? So, you have to be aware of that. It's safe to keep your profits in Binance. I always withdraw profits. I vault my profits, as they would say in gambling. It's not just a gambling term. It's a poker term. It's a gambling term. It's just a term. Vaulting your profits is just a term. I vault my profits. Vaulting means you set like a active. It's kind of like active and passive contracts, or sorry, active and passive trading accounts. Only readapt upside. You only readapt a bottom side, but not an uptrend. Yes, accumulation top distribution. Yes, exactly. Yes, that's correct, Loon. Accumulation to accumulation means an accumulation candle has to close it. Distribution to distribution means a distribution candle has to close it. This is absolutely correct. Great point. Mandala exchange, yeah. I'm not too familiar on it. The cotton exchange. Correct, but if you have multiple distribution candles after hard close on the downside, you adapt the candle to the hard close itself for the lowest distribution candle that swing. Where the trend is created, and then hard close, like you can see the distribution to distribution was created here. Therefore, it means in this moment it needs to hold like this. Therefore, in this moment, when this trend is created, it has to, it's already created trend. Right here is where you have, and you'll have it on smaller time frames too. Like I'm sure it happened on like a 1 minute time frame or some crap like that. 1 minute time frame goes below, hits a level, moves back up. For example, in BTC upper range before the dump, goes to the weekly level, but never tests the lower time frame, at least for now. Yep, I mean, it just tested the first part of the range. Yep. That's how I've been doing it. Wasn't completely sure. I appreciate the clarification. Fine to adapt the next hard close every time. I usually adapt the hard close candle hits a level. So whenever a hard close happens, I always verify on higher time frames. So let's pretend this was like a 3 minute right here. Let's pretend this is the 3 minute right here. It's like, oh, it hard closed. Oh, what's happening? I always go and start with like the highest time frame I can find. Like hourly is up here. Okay, well, this clearly isn't the trend. This could have led to, you know, test the trend, lose the trend, regain the trend kind of thing, right? Like that's, I always go back and verify time frames. And then I would go to the next time frame down and be like, oh, easy. There's the 15 minute, the 15 to the 15 is what was created. I don't need to go any lower. And that would be very straightforward and simple because we don't have a 4 hour. Actually, the 4 hours created here. And you can see there was a trend that was created before that. The hourly is created up here, right? Is there a 15 minute? Yeah, the 15 minute is right here, which actually might be the 5 in this case, but it's fine if you go like this and you can see, oh, here's the 5 minute trend. Oh no, it hard closed. Okay, well, was there a 15 that was created there? There was right there. So you can just verify by finding like the higher trend and then going down in time frames. You can't go up in time frames. When you go up in time frames, you have to reset your trend. Wait, Cotton obviously used Binance to me. Sounds like a good question. Vault profits, most money in the bank. Some on exchange seems to me. So I only keep a small amount of money on Binance because, well, define small amount. It's like whatever. I keep a 5-figure amount on Binance. I would never keep anything more than that in case they ever, like I learned from my poker days in poker, what happened on Black Friday in 2011 is all the exchanges got shut down. Like the poker exchanges, Ultimate Bet, Poker Stars, Absolute Poker, Full Tilt, like everything got shut down. And I had money locked in Full Tilt. Like I had a huge amount of money locked away in Full Tilt for years. It took me years to get it back. And even though I believe it was in 2013, the Supreme Court, or it was maybe like the end of 2013, beginning of 2014, Supreme Courts finally ruled. And then Full Tilt was to reimburse money. I think it was like 2016 or 17 before I got my money was locked away for years. I learned my lesson in poker then that anything can happen and never to keep any large amounts of money anywhere because I had money on Full Tilt that was locked away forever. Like it was, and they actually, Full Tilt went, I don't know if they went bankrupt or if they just shut down completely, but it took me so long to get my money. It was unbelievable. It was like years after there was like this big thing where Full Tilt was like, oh yes, you know, we'll no longer be in operations. Don't worry. We have to pay back all of our customers. Like I had to wait years after the court rulings, and the court rulings took years. So it was like a 4, 5, 6 year process before. I don't even remember how long. I think it was like 2016 I got my money. I think it was a good 5 years before I saw my money. So at that part, I learned how to vault my money, which is, you know, just taking your money and making sure you withdraw it. And yeah, I don't keep that much money on Binance ever. If I got hacked on Binance, I have not that much to lose. If Binance ever shut down or stopped withdrawals or some kind of Canadian law change or for whatever reason, I never keep money on exchanges ever. It's a silly thing to do. And move profits to my bank after trading, yes. You just on every hard close. That's where you start creating cycles. So that would be the distinction between creating a cycle versus finding the right trend.
So even here, you have what could have been.
Don't forget to like the video. I always forget.
Backside, and then front side could have been here, or it actually could have been right here, because you can see the valley right here, the front side of the move, right? It's just a matter of how greedy does this go? Where do people re-inject? There could possibly be a few front sides in here, but again, relatively, you can make the right choice 80 to 90% of the time, as long as you understand how they work, right? And then your range is defined. So we just broke down a little piece, and if we go to the hourly, you can see all we really broke down was this little tiny section right here. This is all we did. We just broke down this little section.
So I think it's important right off the bat to say, let's get out of this replayer tool. Current part of this move. Breaking down these micro parts of the ranges are really important. Like, you know, in order to take this trade, we don't always have to be in at the very bottoms of moves. Like I make it a habit to tell people, like it's good habit, and it's good for me to preach as a content creator and as somebody who advises other people on how to do this. Get in at the bottom of the move or don't get in at all, because it's just like the lowest risk possible. But there are points in trading where you can see a range like something like this, and if it's breaking down and you're given the signal that a move is about to break, like you don't have to be in a short from this point in order to be in that trade. Just important to put that out there. And all we did was microanalyze this range, just like you would do. This is a bit of a bigger range, I suppose, but it's still pretty microanalyzable.
Section, right? That's quite simply all we did. So we're just going to let this play out and see kind of what happens. Aha, you see? Oh, I wonder why this level gets hit. It's its own independent range, right? So this range, tested, untested, I'm not sure. We'd actually have to go into here and take.
You would be able to see the trend from here to here that got broken to onset that range attack.
Happened. But now you can see where this is the backside of a move. So it's going to cause a large bounce. This is a strong level because it's the backside to something else's front side, right? So like this is the same
part of the move that's protecting the hold. Sorry, the break of the move.
Stuff we always.
It's the hold protecting, right? The break.
So you can see where it tries to test this range, and it tests this range and falls immediately to the top of its next range. So it fails the top of one range and immediately tests the top of the next range. So if you were to go back here and take out all these front side, backside levels, because they were already, used and tested and all that stuff in here. And, you always want to be greedy with this stuff. And so we can get rid of this, we can get rid of this, we can get rid of all this stuff in here that's already used up and it's already gone. And, I started by identifying the range here. This is the top of one range. This is the top of another range, almost as if this was a backside to this front side, right? So almost as if it was a backside to the front side. And this is like a combination backside, front side level to its own set of ranges inside of here, right? So then you go to the minute candles here and you see it's tested. It's not moving up. It's failing. It instantly goes down. And this is like a really, I'm sure this is like an alarming amount that it went down. It looks like it's about 5% that it went down here. No, that's not the right tool. What am I doing? So it goes down, yeah, for almost 5% here. It goes down to quite alarming, but where it goes makes total sense. It's like, oh, this is the perfect level to buy. This is the backside range. That's strong bounce level. This is where the move will bounce. It's a strong bounce moment, right? And then so, dictated by the event of time as well and how strong the level is. It's a 1 hour level. You're not talking about a 3-minute front side level. You're talking about a 1 hour backside level relative to how fast this is moving down. that's a hell of a hold level. We already have the backside of this range hit, and we already have this range was already tested and used up. This is relatively untouched and unused, this stuff in here. You can see all the noise that's right here, and all the tests that happen, and it goes up and it comes down and develops a range, and has to have all these moves in it. And meanwhile, you have this right here, which is kind of most likely just, well, you can kind of tell by the candle. There's not a lot of noise in the chart there. It's kind of just, it probably just has a relatively clean move up where it doesn't come back down and up and down and kind of test like crazy. It just kind of breaks over, right?
So something I like to do is use ranges where they onset polarity. If this range creates polarity from the past, so say this is a pretty important ladder point, say this is the final ladder point, that creates the polarity of the move. It also creates a hold level. So what I mean by that is like, here, you know what? Let's get rid of, not that one. Let's get rid of some of this stuff here. Let's get rid of actually all of this. Okay. Let's get rid of all of that. What do we have in here? Okay, that's the ranges. We don't need that. So this would be kind of like the ladder point right here, right? Kind of think of this as like an origin level, and we'll just use that. If this is what breaks the move up, it will also be the polarized range for the breakdown. So come on. This right here will also polarize the breaking of the move. So if this can't hold, if this is breaking it up and this can't hold the move, it will also break it down, right? So then another point you would have, you might have to go back further to do this. Let's just go back to like, yeah, okay, this looks good. If this, come on, if this, whatever hold level is here, it looks like right here, backside, I'm not going to switch time frames, that's fine. If this is what breaks the move up, this is what will hold it. This level right here is what holds for the polarization below. So when you lose that, it polarizes it extremely. So it's kind of like whatever move breaks a ladder point, it's fine. You could just mark anyone. It's all the same. Whatever move, that's fine. Whatever move breaks a ladder point, right? Like this is whatever hold level here or whatever it is. If you break that and you move up, that also is the polarized moment in the chart, in the trade right there. So that's also the polarized moment, which means it just moved to here, which polarizes it down. So whatever breaks the move up, and in this case it's this, whatever breaks the move up also polarizes it down, because it's like it's protecting the entirety of the range. It would be the greediest point.
Untested range, like it never actually comes back and
pre-breakdown, I should say.
Struggles to get above. It actually just kind of breaks over its range and just leaves it as its own independent, untested range, right? So kind of just leaves it completely by itself. Makes total sense why when you come down here, it's the perfect buying opportunity, like literally the perfect buying opportunity. Within 2 hours, I wonder how much money,
because that was the breakout point, it also polarizes the range
you actually make on this by
hopefully that makes sense. I think it does. It's pretty
like
straightforward.
11% in 2 hours. It's a little silly. Makes sense why you did though, because there's a lot of many of millions of dollars that instantly gets injected here that takes this thing up to some even range in here. So let's look at that. Like what range did it test in here? Like you can even go to the hourly and see where the tested range is in here, right? So you would say like the range lies somewhere between this point here, right? And we're going to use this one just because it's already on our screen. The range lies somewhere between that point and this point. So when we start breaking down the ranges, at very first you have,
it would be like the same thing on this side. Whatever move breaks it down here would polarize it up as well.
We're just going to break them down and see.
More in the future on that.
This right here, you'd have, which is actually tested right there, right? So actually this does come up, test, pull back, reject. You'd have this part of the range here, which is also already tested anyways right here. So if this one is tested, technically this one's not really that great. This would kind of be the first untested level, right? Like this is the first untested part of the range, which would be its own backside to whatever front side is right here, right? Like this is the front side valley, just like we looked at when we looked at the weekly and we did the daily and its immediate level right to the right. Backside front side combination, right? Greedy level versus strong level. What needs to hold it over time versus what needs to hold it in the moment, right? So fine, you come up and you actually hit this level, but that's fine. You could have just shorted this or sold that. You know, you're in here and you can just sell this. It's kind of the backside of the range. It immediately pulls back and then it goes after this level a second time. So I kind of see this as the first test of this right here. And then this one here is the first test of this right here, right? So now this is going to try to hold over time to break because again, it's a stronger level. It's not going to have this kind of instant reaction like this one did, right? It's going to have more of a elongated pullback, right? So then you can even see the backsides of range, like the inverse range finding. And then, you know, even here, you would say there's the range there to this here. So like, where is this going to bounce, right? So we can just, you know, we're going to maybe delete this one. We don't need that. And you can even see this is its own range right here. So then you would like look in here and you would say, well, where's the range here? Let's go take a look. You know, you'd have backside of the range right here, right? You'd have the backside here, which you're seeing being tested, and you know, could even be here maybe on a 5-minute. Let's go take a look, or maybe there's a 15-minute. We always have to kind of do our job and find the right time frames, right? So you have front side right there. You have first it would have been this, which is fine, but then we're looking for the kind of the untested stuff, right? Then you have backside, front side, right there, like that. So let's see how this plays out. Backside gets tested, it's gone. Oh, maybe the backside holds. Boy, wouldn't that be nice for once? Usually they go right after the greediest levels. Well, let's just see. I'm not going to say anything yet. There's the test of the level again. Oh, stop. So you can see this actually went after the greediest part of the front side of the move, right? So backside, front side combinations as to where once this is tested, we move this to the backside like this, whatever. Maybe we have a different time frame here. 5-minute. Yeah. So we had a different time frame. So we had the wrong time frame selected here, which is fine. That's part of doing what we're supposed to do. And then this is its own independent range, right? Like you've got the backside to this front side, right? So then you have the backside test, pulls back, you have the front side test. And I wonder if we missed anything else inside of here.
There's things that we missed there, but that's okay. Not important.
Like this is a pretty good level, but you do have a lot greedier stuff here, right? Like technically you would have backside, front side range, right? Technically you'd have this. Now, whether this goes after this or not, I'm not sure. That's quite greedy. I would think it would, you know, maybe go after something like this instead right here, which actually it does, 59.08. So then if there's another, excuse me, if there's another rebuy, it's here. It's at this level here, this 58.36. It's kind of the greediest front side that protects the entirety of the top of this range, which the top of that range is got its own whole stuff in here, right? There's a bunch of stuff in here. So, kind of once you lose this, you've already like broken the range almost. Yeah, and you can see it attempts to go for it. Maybe it uses this right here because it had already been previously held. Maybe it's just using the front of this right here, like something super greedy, right? Like we did see this level right here, I believe is what we had marked prior. And this does get tested and then it gets held, right? So, greed and ranges versus where you take entry, but at least you have decision points now. And you could have said like, I'll enter here, or I just won't enter the trade, or I'll enter here, or I just won't enter the trade. And it takes out all the decisions in between, right? So then, even here you have, and we can maybe just go to a higher time frame to walk this through now. Even here, you have kind of the final decisions where, on larger time frames, it's quite obvious, but then so you get to the smaller time frames and try to find these acute points and backside, front sides of ranges, and you'll find them, right? So let's maybe just go to. Oh, we're in the moment here. So even right now, I would look at this chart and I would say, where is your range? Your range is now, we know this is the bottom of the range, right? Which means that this is kind of the top of the range that it's currently in, which we already know is testing something in here. So this is kind of the range that it's in, what it's testing down versus what it's testing up. And we're just going to take all this stuff off the screen and start trying to find the levels of what it's doing. So this is that 15-minute. And so this is perfectly fine. That's like, its own backside, front side combination here or whatever. So the range is right here. Let's make sure we have this correct on the hourly. We don't. The range is actually right here. This is where the move starts. So this is one of the levels inside of it. So we actually have to find the levels inside of here. This is obviously the greediest.
Just going through time frames at this point,
which is untested. So this is like a perfect spot to take profits or to short. Enter short or take profits, because now you've got a tested backside range here to this little region. Now you're going to have the same thing over here, and we can go find the kind of the combinations. Backside, and quite simply put, greediest front side. You do have another front side like right here. I didn't think there was anything on the 15-minute in here, is there? I think it's pretty much just, your ranges from here to there. So we're just going to start finding the greediest valleys, what looks like smart places to inject. Yeah, you have this right here or this right here. Let's see if there's a 3-minute.
All of these are backsides, by the way, that I'm looking at right now, just to be clear.
Definitely have two levels here. Which one you go after is up to you. 6604 versus 60. Wait, did I say that right? Yeah, 6604 versus 6506. 6566 versus 6600. Okay, perfect. 6600 is like the kind of like a psychological level, they call it. It's a psychological level, guys. It's not, definitely not. It's not psychological at all. It's actually just the part of its range. I would go after the 6600 level because it has a 5-minute range on it. Oh, they both do. This is a decision we have to make. I would measure this and I would say, okay, if I do enter here, will I get liquidated there? That's something. If I'm doing like 100x trading, I would say, is there enough to liquidate me here? No. I guess theoretically you could take both levels, although again, you could test the very final piece of this range. So you have to be careful, because then you have its own range inside of here, and you do have this right here. What is this? 6624. So yeah, I think I might wait. I think I might look for this 6624 level. It's really greedy, but it's definitely going to get rejected, right? Like it's super greedy. But so there's a knife catch here somewhere between this level, and this level. So we can't really know what's getting hit until we're kind of moving up into these other regions. And there's other stuff we look at when we're looking at, oh, is this a good area, right? And then even that might not be correct, because you might reject the backside of the move, which is this front side here. So you have a range combination here as well. So these are all the levels that are going to get tested on the way up. You're going to have a test on one, you pull back, a test on another, pull back, a test on another, pull back, until you get to the final level where you have the huge knife catch. Maybe you go like this, pull back to here, and then you go like this, pull back to here, and go like this, and then maybe pull back to here, creating some kind of trend, and then you end up going into this region here, and these here and these here and these here, and then you finally get this, and then you have a big pull back down, because it's those greediest levels that will, within a range, that will break a move that move down, where all the capital gets injected there. So this is range finding. And when we look at hold and break levels, we first define them by saying, go for the highest time frames and just find the spots where it's going to bounce, because that's easy money, right? Like even here, yes, okay, I'm very good at what I do, so I could find this level here, 69.35, no problem. Get why it's the level. I understand that's the part of the range that's greedier.
It's the polarity in the move.
It makes total sense, right? It makes total sense as to why I should enter a trade here. Theoretically, if you were to just go on the daily, and even if you're just doing 10x leverage, 100x leverage is playing at the highest level in trading. Like there's nothing higher than 100x. It's the pro leagues, right? You do 100x and you can make five figures a day. You can have days where you make $100,000 or even more, right? So doing 100x is a different game. There's no reason why you couldn't have just found the range here and shorted the range on like 10x or even 5x or something like that, and just took 18% profits, which is on 10x is still 180% in one day. So that 10x here would 1800% in one scenario. With if you can range find the exact moments, right? You can range find that exact moment right here. Yeah, sure, you can 100x and it's 1800%, but there's nothing saying that you can't just find these greedier points right here in the charts and do a 10x with a good amount, and 180% the next day. Like you could double your account if you were just trading an active account, as we talk about that in the blueprint, where it's your active account versus your main account, right? So if you're just trading your active account, what you're willing to lose, you could have just tripled your account almost, like if you got the bottom. Say you only made 150% because you did 15, right?
Orca, I
15%
always
of the move.
dictate
You still,
the range based on the move.
1.5x your entire active account, which is great for 1 day's work. That's insane. Like that, people can't even make that in 6 months. So you range find, and as you get better at range finding, you increase leverage to see like, oh, I'm a better range finder. I can increase leverage because I understand how to reduce risk in these knife catches even further, right? So using our knowledge to refine our levels, to refine our choices, our decision moments. And I think a lot of people struggle because they can't quite, like,
On the
this is an
move, the
easy
current
level to
spectrum
find.
of the move,
Understanding that
use
it's its own
static rules.
independent range is,
You can't use static rules and say, oh, the 1 hour does this, because there's trends at play, there's polarity at play, there's different components at play that make it so that it's impossible to have a static rule on ranges.
is not an easy concept to understand, right? It's an easy level to find, but what's the difference between that one and this one, right? Like, why not knife catch this one versus this one? Very specific reasons. We touched upon some of them today. We didn't touch upon all of them, but we touched upon some of them today as to why somebody would, knife catch this level for 100x versus something here, and this just melts through like butter, right? Like, oh, it's untested, but it still just melts through like butter. Why, right? So you have your own reasoning there, and again, we talked about some of it today, but maybe not all of it. And then so there's still all the other stuff going on in the chart. So trends, and so you have this trend here like this, or to that candle there, to this one here. So you have trends that break off certain ranges and things like this. So range finding is super important. To kind of sum it up, and I'll just delete this chart here. That's fine. You can just delete this chart. To sum it up, you start by doing this. You start by saying, you go to.
I think an important thing to realize is that the architecture of every move is going to be different. Orca was asking that in the chat, and so was JCap. You have to realize that it's going to be dictated based on more than just a level. We have trends, we have data points, we have what level was attacked to create communication in the future. There's more than just, here's a level, we move down to time frame X. You always have to do your architecture on the chart, and that architecture will show you which time frames to use, which ranges to use. Like in this example that I did, it was clear to see the importance of the 15 and the 4 and the interaction they have in this chart. I believe we don't have it anymore. No, we don't. I deleted it, but that's fine. It was simply just a 15-minute trend like this. I believe there was a 4-hour like this. So it was important to understand the relationship that they'll have in this move during what time frames in order to make those assessments. And this move is going to be completely different than the next move and the previous. This is why bots don't work in the industry. This is why a bot can never work, because the variables, as I found in the past in developing a bot, the variables that can exist are too vast to create a static rule set. You can't, it's impossible, because we can only see one moment in the future at a time. We can only ever see the next moment in time, and that's it. So to create like a static rule set, it's impossible. It is, I worked on it for years on the bot. It is impossible. You have to always see what the data points are communicating on the chart and what's relevant in that move, whether it's polarity, whether it's trends, whether it's tested versus untested levels, whether it's ladder points. It's always changing. So you have to dictate your architecture and let your architecture and data points communicate that to you.
You go to a high time frame and you just start by defining a range. Top of the range,
The cotton voices, yeah.
bottom of the range.
Always two
and
cotton
work
voices.
through it from that point, and work through it and find more minute ranges from that point. Work through it and find, where's your first range? Well, your first range would have been here before it was broken. Like in this moment, you would have been here. So you're just going to find your range, and then your range gets defined to this point right here, the backside right here. So then you can just start going in there and saying, you got the backside there, right? We've got the front side, what looks like maybe here. I think we need to go further time frames to find the proper front side. But we could just use those 2 points for this example and see how they are reacted. There's the one bounce, and stop. So
Can anybody tell me why this move broke down so hard right here? Wait, let me make sure my mouse is on the screen. It's not. You son of a bee. Can anybody tell me why this move broke down? Can anybody tell me why this move broke down so hard? We went over it today. So why did this move break down so hard? Trend failed to test the inverse. Nope and nope. Loss of the ladder point. Polarity. Polarity is the right. Where's polarity exist, Loon? You're on the right path. Where does polarity exist? It's a polarized moment that caused the breakout. You broke down what you broke up. Yes, exactly. You see this right here? You see how this breaks the range up? It also acts as polarity to break the move down. So that's crucial for you guys to realize that in this lesson, because this is not something I taught in Butterfly Effect 1. So right here, this is what broke the previous ladder points in the move. It's what caused the break up. If we were to trail this sideways, once this is lost, it's the polarity of the move down. So it can go back and test the base of the range. So that's critical to see. What can break a move up also acts as polarity on the way down.
Backside range here. Upon doing this, I would actually say this is
the range, as they call it,
range, because that's the valley that creates kind of the origin point. You know, you can't always just use the top of a candle. Like, it's just, oh, top of a 4-hour candle. Well, there's a greedier point inside that 4-hour candle. It's a 15-minute origin, and then even in there, there's a 15-minute valley.
Rewind this for a second. Notice how this tests something from the past. I wonder what that tested, because today, remember when we tested the hourly? Oops. We tested the hourly, right? Okay. Let's start with that. Let's go to the 15. Delete this. Come on. This is what broke the move up, right? And this right here, we can go to smaller time frames. 5-minute backside. Is this tested? Kind of is tested. Seeing the similarity in these moves now? Point that broke the move up gets rejected off the hourly, goes straight after the other hourly, which holds the 15-minute trend, goes right after the hourly, right down to its range. Hourly, right down to what could create a ladder point for that hourly, versus here, which is polarity, hits its level, breaks the, okay, yeah, you guys can see, breaks a polarized moment, goes after its next level down below.
4-hour candle. Well, there's a greedier point. I'd like to see actually where the greediest point in that is. So then you'd have kind of the ranges right here.
Aha, and the chain of events start to make sense.
Expected. Where do we have that candle pinned first? So you'd have, let's go to a higher time frame here, see what we can see. Backside, and then you'd have a front side range down in this region somewhere. So I'm just going to pin it to the top of this candle and see where it is. Yeah, it's actually right there. There's the valley right there. So you'd have kind of, you know, your two ranges. Biggest bounce, greediest level, right? Backside and front side of the range. So even we can just go in here and see how this reacts, maybe from a little bit further back. Even we can just go to 3-minute charts here maybe and just see what happens. So you do have your first bounce, and you so fine, you're going to pull back off of this first backside level, right? Like you've got the backside, you even have a backside.
What's important right here to realize with these two tests? What's the most important thing? What's the first thing that comes to mind? Two terms here. Two very simple things that should describe the entirety of what's happening in a very simple and beautiful way. Ladder is one of them. What's the other one? Trend is not. Pandora's box is not. Test polarity, ladder the move. So if this ladder fails, it's describing to you that polarity is failing. So if this inverses the ladder, what would that be telling you, right? Test polarity, whether the polarity in this move is backside, whether it's the breakout point, no matter what it is. test polarity, ladder the move. What would be the next piece? Inverse the ladder. So we can actually create an entire language between us pro traders where we would all stand in a room in real life. We wouldn't use any real communication. You know what we would say? We'd just be 20 of us there, and we'd be standing. Laddered polarity. Ah, laddered. Inversed. Inverse ladder. Aha, inverse ladder. Break polarity. Break polarity. Go to range. Aha, go to range. Aha, ladder range. Ah, create trend. Create trend. Yes, ladder trend. Break inverse. Aha, target break. And that's all we'd have to say. We wouldn't even have to describe anything. We could just use data points to communicate every single piece. And that's all we would say. We would be 20 of us in a room, and that's everything we'd ever say. And everybody would look at us like we're crazy. And that's all we would ever have to say to understand every part of not just those words, but that's the way in which we would speak. We would say, test polarity. And then we'd all look at each other, nod our head. Yes, test polarity. Now ladder. Yes, yes, ladder. Aha. Inverse ladder. Us. Ooh, break polarity. Go next test range. Aha. Like cavemen in our own regard, right?
Further back.
That's how important data points are.
Pretty good target here.
We don't need all this fluff English.
Another question.
And
then so you see.
Test polarity. Yes, ladder. Inverse. Inverse ladder. Uh-oh. Ooh, ladder down inverse. Uh-oh, break polarity. Aha. Ladder confirmed. Yes. Uh-oh. Inverse ladder. Oh, no. Test. Break polarity. Test range. Uh-oh. That's all we'd have to ever do.
Range, and then you hit your next range, right?
Again, just to convey the importance of we don't need anything else.
Already falls through the range, and that's where you have the collapse of the move, and it moves down in quite a big way, and it does, right? And then you go and you are already, seeing the spots where your range is being respected, right? Like you have range being respected, and
2022 language goals. But that's how powerful ladder. That's how powerful.
We won't talk about
data points are
here about what we do in this scenario where we have a range that we're not using and we come up and above it. We won't talk about this, but I guess it's pretty obvious on the screen. There's important information there from those previous ranges, but not really important for today's lesson. Maybe a little over the top for today's lesson, a little bit well past what we need to concerning ourselves with right now. So
Latin binary.
Yeah, I think that's a great start for range defining. I think that's a great start for understanding that we don't just have strong levels and greedy levels, although that's how we learn them. It's a very easy way to understand where some of these bigger points in the charts lie, and we can just take the backside bounces and the greedy bounces, or I start by calling them the greedy and the strong levels. So the strong levels are the backsides and the greedy levels are the front sides, right? So we just start by calling them those, but now we're moving on to understanding them at a deeper level. There's a range that gets defined, and we call them front and backside legs. And then there's combination levels, which is front side, backside legs. So this is a good break into a little bit of a different set of materials here. So yeah, I hope that makes sense. Okay, good.
So I just Googled how many words are in the English language. 171,146 words are in the English language. I bet you we could get away with 100 to 150 words, communicating everything we would ever need to control the most deep and largest set of controllers around the world, which is the stock markets. I bet you with 150 words, we could communicate everything we would ever need to communicate, because data points give us one exact thing. So this is just kind of, conveying the importance of data points. And there's very specific data that's communicated on our charts. And with a small dictionary, we could explain the stock market crashes of 2008. We could explain it all. I've been doing this in the past, and it's just like, go to DJI in the 1800s. You guys have all seen me do this, but then you can just describe all of human history in terms of the stock markets and what controls everything. And you could just say like a few words and you'd be like, aha, backside valley on the monthly, I believe this was. Backside valley. Aha. Ladder. Aha, move up. Backside valley, move up ladder. Aha. break polarity, move up, range, rebuy, backside, move up, and so forth and so forth, just to kind of further dummy down this point and prove it that data points are everything that we need. So a lot of people look for static information, which is, this is so normal. This is so normal for people to information seek this big queue of events when there's a simple beauty that controls it all. It's so normal for every single trader to try to think they need to be described more and more and deeper, which in a way is true, because in order to understand the simplicity, you have to go inside of these concepts and theorems, and you have to dissect them from the inside out and create this big queue of theory and logic that makes sense around it. So in one way, as a new trader, you need to get these things described to you in a much deeper way. You need to have exactly the questions that I get asked. And this is not a slight at any one person or anybody at all. This is just the normal queue. So if you find yourself asking these kinds of questions, it's actually, you're on the perfect path, because this is exactly how you start to understand the deeper logics, is that you ask the questions that once you get to a certain point become so simple. You ask the questions like what's being asked today by many people. Well, what about this time frame? And what about that trend and this trend and that trend? And then you have to put this huge box of thousands, if not tens of thousands of words just to describe one theory. But then as you get better as traders, it's just a simple beauty that these couple words can just have the communication. So when you understand the communication layer of the charts and the data points, that's why I keep stressing to you guys data points. When you understand that communication layer and the data points, a couple simple words, like we could, as pro traders, live off 150 words and make millions of dollars and control the world through the stock markets off of 150 words. We don't need anything else. We don't need to describe anything else. We just need to understand what the data is communicating. And a few simple pieces can tell us that. So I think that should just put into perspective for everybody in this group how important the lessons we did on data points at the beginning of this were to preset the entirety of everything, understanding deeper concepts and deeper layers. Economy, I mean, economy, like the way I would answer that, does the economy have influence on the charts like DJI? Inflation is the word you're looking for. Economies always inflate. Economies don't ever go through deflation. Economies always go through inflation. So when you say, do the economies have influence on things like the DJI? DJI has always gone up in value because the dollar has always inflated. So in a very simple way, it's just like, does it have influence? No. Does it reflect how the world works? Yes. The economies don't influence the charts because inflation is a natural occurrence. So naturally, you would expect inflation to happen, which means it can't have influence, because influence dictates that it alters its course through its trajectory, which can't be true because inflation is a natural occurring process that happens. Inflation happens to the dollar all the time. Therefore, the economy can't influence the markets because inflation and the price of something going up is just the way it works. So there's a big misconception there about values going up. Yes, but so is the value of the dollar. Does it outperform? Yes, in some markets, yes, in some markets, no. Does a stock outperform the rate of inflation? Well, in some markets, yes, in some markets, no. Sometimes stocks move down as inflation goes up, and that's where it's reflected as it doesn't, right? So I wouldn't say that, does the economy have influence? No. I wouldn't even say, does inflation have influence?